Well, welcome back to the Small Business Mindset. Today, I'm excited to talk about something that is actually kind of interesting and very personal to me. It's real estate. I know I'm in commercial real estate, have been for a number of years, and I can think of no better person to join me on the podcast today than Shawn Terrel with United Country Real Estate, and also hosted the podcast, The Sale Ring. So I want to say good morning. Welcome, Shawn. I would love for you, Shawn and I, back up for a second. Shawn and I met each other a number of years ago, almost 10 years ago, as we were working on a project together in the Topeka, Kansas market. Shawn focuses on a little bit different sector, I would say, of real estate than I do, but we both work in markets across the Midwest, and I really value his opinion and his insight. And so those that I connect with in my world through commercial real estate and actually business owners in general, I think this will be an interesting conversation to get a glimpse of what is happening in the real estate markets here coming into the end of 2022. So Shawn, welcome. Could you mind tell us, our listeners, just give us some background about you. What are you all about?
Sure, absolutely.
pressure.
Well, it's great to see you again, and I appreciate being invited on your show. This is going to be exciting. So, I'm a professional auctioneer, as you know, by trade. That's my background. I've spent about 30 years in that profession from Western Oklahoma, primarily in the non-urban industries. So it gets very rural. In Western Oklahoma, a lot of farms, a lot of ranches, country homes, things like that. In 2007, I got invited to initially come up as they were asking me to be a trainer in auction services for United Country. And about an hour into the conversation, they were offering me the vice president's job. And then that was a good move for us and for my family. So we moved from Carmen, Oklahoma up to Kansas City, and here we are, fast forward 16 years later. I've been the president for a number of years of auction services for the company. So, and we split that into two divisions, traditional real estate and auction services. I'm predominantly over the auction services division.
Mm-hmm. Awesome. So I know, Shawn, we connected a number of years ago, and we talked about this a little bit on your podcast too. I was in the process of trying to manage a larger portfolio, a commercial portfolio for a client. And we were at a point where we needed to move assets a little faster than what was happening. So consulted with you on that. So I want to hear your lens because, like I said, we dabble in little different areas of the real estate market. What are you seeing? What trends are you seeing in your world? I want you to go back a little bit, pre-pandemic, pandemic, and then currently. I think we all have a different lens in what's happening in our perspective. And I think our listeners are probably particularly interested in what's forecasted for us, try to understand what's happening in the real estate market.
Pre-pandemic, the markets were good. The markets were inclining, and there was, I think, prior to COVID, we were experiencing good, stable growth and strong growth. And then we anticipated that may slow down. And I think that there are some market segments, and you can speak to commercial, obviously, because you are very well versed in that. In the markets that we serve, traditionally are non-urban America. So 50% of our business is, most people outside of United Country, they say, yeah, you're a very large land company. Actually, about 48 to 50% of our business is homes, is residential, but it's not necessarily residential in Kansas City, in Los Angeles, in Milwaukee. It's 60 miles out of town back into those non-urban markets. We sell a tremendous amount of homes in those markets. Well, guess what? The pandemic struck, and that actually was a huge catalyst to a growth boom in non-urban America. People, they're very reactionary. So the first thing that happened is I have to get away from everybody, and they started looking outside of those corridors, outside the suburbs, and moving a little bit farther out. So our business just exploded over the next several years. And that's been very healthy for the company, for the business. So we've witnessed that. In the land sector, it has also had steady growth, both pre-pandemic, and it, I believe, has been stimulated through kind of that same cycle. There's people that are investing in kind of whole assets, and whole assets tend to be real estate. The one thing about real estate versus stock markets and investing into the trade industry is You can drive by that farm tomorrow, regardless what the markets are doing. They're going up, they're coming down. That farm's not going anywhere. It'll still be there. And you're still going to enjoy over a long period of time normalized appreciation. There's good growth in agricultural land and production land. So both of those have been very, very good, both pre-pandemic and post-pandemic. We're on a significant growth curve right now. And I think most of those two industries are seeing that in non-urban America.
That's great perspective, because I agree with you. Pre-pandemic, I think we were all poised, everyone, whether you're in real estate or just general business, we were poised for a reset. We were poised for when's the softening happening, because it had been over 10 years. Every 10 years we experience a little economic dip. And so I think we were ready for that. I don't think anyone knew how it would happen. But what a very different thing happened in the real estate market that I don't think we were prepared for. So moving forward, what are your clients and what is your markets that you work within? What does 2023 look like for you and for us?
I think I'm very optimistic. We're looking for maybe a little bit of an adjustment. I think there could come an adjustment. Obviously, interest rates are beginning to rise. Central Bank had reported, I'm trying to remember if that was a May or June report. I believe that their new loan applications were down about 12% at that time, which means less people are applying for loans because the interest rates are coming up. Obviously, that's going to slow the markets down just a little bit. But this reaction to, I believe the bottom's going to fall out of the market. None of us here at this company, and I think most people in the non-urban industry, we're not anticipating that's going to be the case. And to be honest, we've had such strong growth over the last 3 to 4 years. It needs to trend down just a little bit. It needs to stabilize a little bit, because we're on this trajectory right now to where pretty soon you won't be able to drive by a farm without paying a toll. They're becoming very, very expensive. So I think there's a correction that's probably needed in the economy right now. So that's not altogether a bad thing. The housing markets, we're seeing them starting to trend down. So as you know, we're part of the Heartland MLS here in Kansas City. So we get a lot of great statistics locally out of that MLS. Houses being put on the market within just a couple of days, we're receiving anywhere from 5 to 10 offers. There was a lot of pent up demand, still a strong shortage of supply. That's not going away. There's still a limited amount of supply, and that's how the economy works, right? Supply and demand. It's taking a little bit longer to get those offers right now. So as we put homes on the market in bigger markets out here, we're watching those very closely, and it can take maybe 4 or 5 days to receive an offer. So the market has slowed down just a little bit, but the offers are still coming in strong. We're still getting a good price for the homes.
Are you seeing any demographic changes in your client base? I know, and that might be very different from your rural markets to more of your urban markets, but that's one thing that's been on my mind is that, as the ownership of real estate is aging, I would be fair to say, are they sellers right now, and who's buying them? Who's buying these properties?
That's wonderful that you asked that, because that is exactly what's happening. Is the stereotypical landowner can be women, but women tend to outlive men in rural America for farmland, agricultural or production land. We see a lot of 70 to 75 and above year old women that have continued to own farms after the husband may have passed away. And they're trying to figure out what to do. And there's two considerations in that. Is one, I think that a lot of people like to leave those in the families if they can and kind of build that nest egg. But they also can, and they've witnessed this with the other families in those areas, that can become very stressful whenever you pass and your kids have to figure out what to do with that. I think most people still, they have the family at heart more so than the assets, because kids need to obviously be taught to go out and make their own living. It's about, how do I keep this family from fighting and keep them together after I pass? So we do see that. That's there was a boom that went on, and that growth boom and the population is now aging out. They're now at 70 and above, and that was your predominant landowner for a lot of years that have reached that time where they need to sell some of these assets. We're also seeing a strong migration out of California. Some of the western states are starting to migrate back into the central part of the U.S. Texas, significantly. A lot of Californians are moving into Texas right now. So that demographic is getting them equipped to buy Texas property. There's a little bit of a cultural shift whenever you move from a West Coast state into a very, very staunch Republican state, or a southern state. So sometimes it's just getting alignment out there of what that area and what kind of what some of those opportunities will be for them and what they're going to experience as they move out here.
Are you finding that most of your buyers, and this still might be traditionally so, are individuals? Have you seen much of corporate assets trying to scoop up land grabs or assets?
Well, anybody that's reading trade publications or following like national news, global news right now, there is what they believe is a global food shortage that's coming. And that's helping to drive and stimulate a lot of the ag markets. So production rates, the amount of revenue or income you can get off of production farms from an investment has increased. Cash rents have started to go up, and the demand out there for farms that are not owner operator purchased, but they're investment companies that are starting to purchase those and then rent them back to farmers, that is increasing in the U.S. for sure.
That's really interesting. So, and I know globally, I mean, Ukraine obviously has been in the news quite a bit lately, and they're a major producer of wheat, for example, as is the middle of our country. How do you think, what is affecting, as we kind of take a flip into agricultural production and that economy for a second, do you think the ag communities within the Midwest will be affected adversely if more people are moving from the coast and wanting to occupy homes in this area, and they're assuming farm ground and turning it into rural residential? Do you see that having an impact on available farm ground and production?
We absolutely do. And as the price goes up, you would think that the supply, the inventory would start hitting the market. It's actually the inverse of that. The more valuable farms become, the more that the current owners tend to hang on to those. So that's limiting supply out there. When they're being transitioned, especially on the fringe, when the urban sprawl around these major cities, as that cropland is turned into development land, which obviously there's a completely different market value for that property at that point. Let's say you're transitioning farms that normally would bring $8,000 to $10,000 an acre, and now they're being sold for $30,000 to $50,000 an acre. So as that continues to happen, it actually slows the transaction process down. It slows the supply down because other people say, well, I have something very valuable. I'm not going to sell that right now. And then, of course, the tax implications come in, and there's other considerations why they don't dissolve that land or dispose of it at that point.
And I know in our neck of the woods, meaning the Kansas City metropolitan area, and I'm in Lawrence, Kansas too, we're having this push-pull right now with exactly that conversation. We have properties that are on the fringe of our metropolitan areas, and our metropolitan areas, because of a housing shortage, they're trying to figure out how to expand. But that expansion effort dips into individual landowners. And you're right, it's this, well, did my property value just go up through the roof? Should I hold on to it longer and wait for the highest and best price? I mean, versus, typically from 8,000 an acre to 30,000 an acre, that's a huge swing from an investor. And then yes. I hear from developers who would be candidates to buy that land and develop it into homes or even commercial development. That pricing model doesn't work for them. And so it's a little bit of this disconnect and this little bit of this pull, try to figure out what makes sense for everybody. And that kind of transitions into really your world, exit strategy. So what do you advise your clients? It's like, if you've owned a piece of farm ground, or if you've owned, a rural piece of real estate, what is the best exit strategy, and what does that look like?
So it depends on timing. There's And the analogy always seems to come back. Most industries, the analogies always come back to baseball for some reason. But if they're trying to hit a home run, and the home run is the $30,000 or $40,000 an acre price tag, it's not that it's not out there. I moved to a little town up here called Smithville, which is about 15 minutes north of our office in north part of Kansas City, and that ground historically could be bought from $6,000 to $8,000 an acre. Then it moved into the 8 to kind of 10 for just 40 acres, 80 acres, agricultural. This past year, we had a seller that approached our local brokerage. One of the agents listed that property, and it was not production agriculture land. This was in timber. It actually it had wildlife on it. It was a high fenced area. He had taken the north 80 acres out of that. And we cut that into 4 20-acre tracts and sold that for an average of $16,000 an acre, which is about double the price of what it would have brought. And had we been able to cut that down into smaller tracts, I think maybe could have doubled that number. So there's a housing shortage that's going on in America right now. They're building new homes, new home construction. The one thing they have to have is more available land close to utilities, and that's if you're in that growth curve out there, I think we coach people right now. What's your time frame look like? That's the first thing that we look for is how quickly do you want to move? Because if you're patient, there may be something out here in the future for you. But if you're wanting to do a disposition sale right now, then this is the available market today. And that's usually where the conversation starts from a coaching standpoint is what's your motivation, what's your timeline, and then here's what I believe we can deliver in a short window. You can go out and advertise farms at $30,000, $50,000 an acre, but when there's a limited supply and land is being absorbed as quickly as it is, I would say in a very reasonable amount of time, 60, 90 days of hammering the market and you're not getting any response, it's time to start lowering that price if you're serious about selling. If you're not, continue to farm it, and it may take 3-4 years to get it sold for you.
That's great advice. And I know that when I coach clients as well, and we're looking at their asset, and of course, everyone wants highest and best price. I mean, that's our job to bring that to them because that's an asset. I mean, that's an investment. It's part of their portfolio. I think the hardest thing sometimes for clients to understand is the time. And I coach my clients too. I'm like, and they asked me the question. I said, what's going to be the biggest challenge when we work together? I said, it might be time. Because if we price it right, depending on the market, it will move quickly. But the price the market commands might not be the price you want or the price you're thinking in your head. And that's always a tough conundrum to really come together on and educate clients. And you're right, timing might not be right for everybody.
Developers look at big development maps, and they sometimes it's about, well, what land can we acquire because the other land around it is not for sale. They're not interested in selling at any price. They're just not sellers. So they have to kind of take what they can get. But there is, at a price point, they can be enticing to a lot of landowners. There's reasons why they buy one tract and not the other. And it could have to do with access to utilities, rural water lines coming out that far, getting electricity into the property, topography. How much dirt are we going to have to move on this to make this? It's going on next door to our office right now. They moved a tremendous amount of dirt into a ravine to level this field out, and they're going to put little estate homes out here on maybe an acre or two. So,
is that an oxymoron? Little estate homes?
Well, I mean, most estate homes that we just sold an estate home is on 40 acres. So this is going to be on maybe a half acre or a full acre, but they call them estate lots. That's what they're tagging that as on the big billboard out here on the road. So, little estate homes.
What has your experience been?
Micro estate.
Yeah, micro estate. There we go. Yeah. I think way back when it was called the mini mansion or.
Yeah. We got to coin something. We need to have something to make it our own.
We do. What has your experience been with, going back to land and whether it's being incorporated and turned from ag land into residential or, planned development, stuff like that. What has your experience been working with municipalities or counties to get either annexation or utility approval or rezoning? What's your experience been over the years in working through that process?
Difficult. It can be difficult. And I So here, let me back up. When you come from Western Oklahoma, that's the first slap in the face. When you move to a big metropolitan area and you say, no, we'll just cut this into 14 tracks. It'll be fine. I'll have this big multi-parcel auction. And then of course you go to the seller even tells you, said, I don't think they're going to let you do that. It's 2007 and I'm fairly naive about this market. When you're in Alfalfa County, Oklahoma, if you want to survey your farm and cut it into whatever you want to cut it into, just do it. It's not a problem. Yeah, as long as you can sell it to somebody, they don't care. But the more I got to learn about that process, the more that I understand you have to have some governance over that, because what happens is people, going back to what you said, they want as much as they can get. And we know that something in smaller quantities, is going to drive a higher price point than selling 40 acres will bring X amount of dollars. But if you can cut that into 5-acre tracts, they're worth considerably more.
Mhm.
Who would not want to do that? They'll pay the surveying cost to have that done. The problem is when you sell that to those people, to the consumer that's consuming those lots, then the county and the municipalities can't provide enough water or power or infrastructure to those. And people are frustrated because now they've bought something that they can't build on or they can't use because there's no utilities out there. There has to be some governments. There has to be a checks and balances to make sure that we're growing at a sustainable pace. It took me a while to figure that out because the frustration is nobody likes to be told what they can do with their property. And I understand that, but it also would, it would be a real circus out here if we did not have somebody that was having to make those hard decisions and say, we're not going to let you do that at this point in time because we don't have the infrastructure to support it.
Mhm. Yeah, that's
So
a great answer. Okay, one more topic I want to delve into as we finalize our conversation today. 1031 exchange and capital gains tax. I know, especially when someone's owned an asset for a long time or they inherited the asset, and that's pretty common, I would say, in this neck of the woods. That's always a question that comes up. And I feel like that's also part of an exit strategy. It's like if you're managing your investment and your portfolio, I mean, how do you handle that? What's your advice on that?
how do you handle utilizing 1031 exchanges?
Right. Or is that always the best option? You know?
It's going to be individual based. It depends on the circumstances and at what point you're at in the investment cycle, whether you want to catch that up and pay the capital gains tax and wholly own that, or if you're going to divert that into another property. People will reach at some point, they say, here's the problem. I don't want to own any more property. I've managed my entire life and we're ready to cash out. And at some point you have to reconcile that because you're not getting rid of the capital gains tax. You're just pushing it into the next property. You're pushing it forward. So we look at the individual when we visit with them. I think in the agricultural industry, that has become almost synonymous in the conversations to at least bring that up and say, folks, what are your intentions? When you sell this, do you have somewhere to go with the money? Do you have a plan with that? Do you plan on rolling that into something else? Now, being a little bit self-serving as an industry practitioner is we can help them place that into another property. We would love to represent the other side of that equation, which is wonderful because they need sometimes somebody to help them go find another good investment and then get it qualified and educate them on the benefits of that specific property or the reasons why to avoid it. So, but one thing I was reading, the USDA does a land report every year. The USDA land report came out for 2022 and land buildings, just average land. And that's a non-urban property that has maybe farm buildings or some type of utilitarian buildings on it. That's up just over 1 year is up 12.4%.
Wow.
Production agriculture land across the nation on average is up 14.5%. And grassland, they call it pasture, but anything that's not in cultivation, just grass land or rangeland is up 11%. Those kind of statistics have been seen in that report for the last 2 or 3 years. So the trajectory right now for agricultural land and the amount of money that's being spent on smaller quantities. So if you spend $1 million, that won't buy you as many acres as it would just a couple years ago. You have to buy less acres with that. 1031 exchanges are a huge consideration for people right now because they are divesting and reinvesting that money forward into either closer assets or better investments for them.
So what does the future look like for our ag production owners of real estate here in the Midwest? Do you think, I mean, will it be on the decline?
Yeah, it's I think it could level off. I think it has increased significantly long enough that it's going to have to stabilize at some point. But I don't look for it to decline that much. And the reason is we're still seeing a lot of cash coming into the ag markets right now. One of the things that gets you into trouble and kind of a precursor to having a crash in an industry is when a lot of the money's being financed to buy farms. We just sold, and this was production agriculture in West Texas and a livestock operation facility. And I would say the vast majority of that $5.8 million that we just sold was cash. It's cash being moved into those properties. So as long as we see that, I don't look for the markets to back up a tremendous amount. I think that the demand's there. There's still a very limited supply. And as long as we keep that scale kind of weighted in that direction, it's going to continue to hold the ag prices strong.
That's great. That's great advice. Shawn, thank you very much for your time to join me today. I want to let our listeners know, how can we get a hold of you? How can we connect? I will put in the show notes, most definitely, everything about the Sale Ring podcast, which you and your colleague Trina are hosts of. Great podcast to listen to. I've learned a lot from you there, but how can we best connect with you?
I'm pretty easy to find online. If you look at anything with United Country and Shawn Terrel in it, my contact information, I was not very strategic in hiding or masking my contact info for the last 6 years. So I'm very easy to find. You can go to unitedcountry.com, look at the executive team. My cell phone, my personal email, everything is just out there. And I take, I enjoy that. I like visiting with people. So I'll welcome anybody that wants to talk more about this.
That sounds wonderful. Thank you so much, Shawn. It was so great to chat with you today.
You bet. Well, thank you for having me on your podcast show. This was wonderful.